Hi everyone, how are you doing? Welcome to another episode of the Blue Fort Blueprint. Today we're going to start with answering the question which is really important in the minds of investors today, and that is, are Indian markets overvalued at the moment? There seems to be two very distinct school of thoughts. On the one end of the spectrum, people are saying we're in the 2000 2008 territory and we're going to see a massive crash from here. On the other end, people are saying this is completely justified, and we have a long way to go over here. This is not even the beginning, right? So let's try and answer with a little more facts and details. Let's try and get to a more nuanced conclusion of what's going on in the markets right now and where you need to be worried and where your portfolios might be doing just fine, right? So Sayam, what do you think of the questions of this question? Are Indian markets overvalued at the moment?
Yeah, this is probably the single question that I've answered or tried to answer the most. If you look at purely the numbers, what people look at is just the PE, right? If you just look at that, then the answer is yes. Historically, Nifty has been trading at about 18, 19 times. That's been the average in the last 10 years. Now it's about 21 times or so. But that does not give you the full picture. Um, there are structural reasons why Nifty is now consistently trading higher than the historical past, and you cannot compare it to the historical average because India's growth potential is a lot better. The cost of capital has come down significantly, and the volatility in our markets have come down. All of these reasons add up to the fact that India's fundamentals have improved, and hence we should be trading at a higher valuation than we were 10 years ago.
I think Viraj, you have a compilation of statistics and some data points that you've prepared for our viewers.
No, so honestly, when we talk about Nifty and its overvaluation, right? This is one question, especially as wealth managers. This is what we have been receiving since what August of 2020. Every time markets go up and they reach all-time highs, and then suddenly there is a week or two of a certain fall, right? And everywhere people are like, "ये थोड़ा अभी महंगा हो गया है, Nifty overvalued लग रही है." But I don't see a basis to it right now. We are, I think, the only economy that is growing at around 13% per annum in the last 13% in the last 2 years, right? And it's bound to be at that level, or of course more than that, correct? So I mean, as compared to other markets, you can see the Hong Kong market or any other Asian markets, we are bound to do well, and so it will most likely look expensive for a long time. What do you think about it, by the way?
See, I think that by traditional metrics, yes, we are overvalued. But like we've always said, that markets work in certain, not a market can never be fully overvalued or undervalued, right? There's so many components to the market, there's so many pockets to the market. Mid and small caps, yes, I'm definitely worried about, especially companies like we discussed who have a very low free float. That means a very small number of shares are trading in the market. Certain sectors like PSUs, energy and power, this we spoke in the last couple of podcasts as well. Those are overvalued at the moment. But in the large cap space, market leaders, which are good quality companies, those still have significant value. Sayam, I think that, we were discussing a while back, there's a significant premium that India's valuation gets because of the type of economy. While growth is one thing, but the type of economy India is, right? And we are, first of all, a services oriented company. We export services, not goods, right? And secondly, we're also a very self sufficient kind of economy. Khud khao and khud banao and khud khao, and consumption is what's driving our growth. Whereas for, let's say, other emerging markets like China, which is very heavily dependent on how the world is doing, right? Because they're an
Exports.
exports oriented economy. And let's say something like Russia, which is very very driven by commodities, right? Oil prices, or let's say like in Indonesia, which is very driven by the palm oil prices,
Yeah.
right? So countries which are driven by exports, manufacturing and commodities, these will always be cyclical, and therefore you can't place the same amount of equity premium on their markets, like you can for India.
Yeah, absolutely. So that's one of the key reasons that we've always gotten a valuation premium, and that will continue to do so because there's a lot more predictability in our economy than there is in the examples you gave, or even something like South Africa or Brazil, which are dependent on mining. Prices of those goods go up, their economy does well. You look at something like Venezuela, uh, which was so dependent on oil, and when that fell, their economy completely collapsed. Which is why you know global investors look at emerging markets as a risk. India is technically an emerging market because our GDP per capita is quite low. right? Where from that angle, we're a poor country, but our economy is not like other emerging markets, and it's quite stable comparatively. It's closer to developed countries in terms of the structure and what is driving the growth.
No, you look at other factors as well, yeah. Within, as Sayyam mentioned, how India is doing well as compared to other countries. Again, strong economic growth and all of that is fine. That's a given, and everyone knows about it. But just look at how our demographics are placed as compared to others. There is a problem of population control. I mean, the population in our country has been. The youth is tremendous over here. The participation of the youth is tremendous, right? And if you see the numbers of domestic participation over the last 2 years, it could be FNO for that matter. It could be something else, as we discussed last time as well. But it doesn't matter. It's still coming into our equity markets, which is where the valuation is, which is why the valuation is high.
Yeah, I think also one big difference with the other economies like Thailand or Indonesia and the likes is that our market is extremely large. Our scale is significantly larger than any of these other economies, and which builds a bit of trust and again predictability and fundamentals. The only other emerging market, so to say, that we're competing with in terms of scale is China, and China is obviously way ahead of us. So the only risk I really see from this perspective is now that China has announced stimulus packages and now foreign money has started going back into China to some extent. That is probably a bit of a risk where India was the hands down winner over the last 2-3 years because China was doing so badly. But now that China might come back or is coming back, that may affect the flows in India. But again, that is temporary. I'm not talking about the next 5-10 year period, probably in the next few months or so.
But we are already seeing it, right? I think Chinese economy, Chinese stock markets also, they're up, what, 25-30% in a month?
Yeah, but last few days they've been falling again because the stimulus was not as much as people thought.
Expected.
Yeah, but again, there's some more expected and so on. But again, the point is that only because China is so ridiculously cheap right now, and
Yeah,
India is,
it's
from
way too
traditional metrics, as we said, looks expensive, that there might be a shift in weight globally. But fundamentally, as we discussed, India should remain overweight in most global investors' portfolio, and for sure in Indian investors' portfolios.
I think one point we have missed mentioning is that the supply side is also keeping up. If you see now that there's about 2 to 3 IPOs happening, if not on a weekly or daily basis, where not necessarily the best thing because a lot of promoters are also selling stakes in their companies, which is not a good side of the story. However, at the same time, you have big IPOs like the Swiggy and Hyundai that is coming up that is going to lap and take in a lot of liquidity. I think Hyundai will be the biggest India's ever seen at a little over $3 billion.
One interesting fact, it is valued at more than the parent company. So
Really?
Hyundai India is
Yeah.
valued more than the Hyundai
So,
parent.
so all of these global
Ridiculous.
companies, so Hyundai is just the first. Samsung, LG, all of these global companies want to list their companies in India so that the parent can actually make some money off of it. And these are all offer for sales, by the way. They're not actually raising money in the
Correct.
Yeah, because
over
they
here.
see the valuation premium that you get in India, right? And also
Exactly.
the growth potential. So that's good that the supply side is keeping up. What would have been a little worrying is that if no companies were looking to list in the market and a lot of money, a lot of liquidity is chasing the same set of listed companies, then that definitely would have been a bubble. But the fact that so many new entrants are there in the market, that means the money will get distributed into better quality and there will be more availability of better quality companies to invest in. So that is good. And again, credit to SEBI. We discussed this last time for creating such a good infrastructure for where people are willing to list. In a lot of other countries, businesses are actually not willing to list. Because they're getting so much private equity money, they don't need to list on the exchanges. So that's a good thing that in India at least. A lot of very old houses are still willing to list their brands on the exchange.
As well as very young companies, startups like Swiggy, Ola Electric. So, it's a good mix of companies that we have. So, for sure. But to answer the question, are we overvalued? We may be a bit overvalued, but definitely not what people think that, we're at all time highs. So it's going to go, we're very overvalued compared to the historicals. That is not the right way to look at it. It's not right to compare with other emerging market economies because fundamentally they're very different. So India, is still in the long term a very, very good prospect. The fact that out of the last 10 years, 9 years, we have hit new all time highs means that that is a trend and the economy is growing, so the market will continue to follow as well.
Correct. I think it's safe to say that from here we should just expect the returns to go down from what they used to be, and there's a different space in the market where there's value. But not. I wouldn't say that we're extremely overvalued. India still remains a very bright spot, of course, to invest in.
The risk
Right.
reward, I would just like to add, is the risk reward ratio is better now, I think, in large caps than in mid and small caps. If we see the historical long term returns for small caps, it's not that different to large caps. So the fact that they've run up so much in 3 years, maybe that segment is overvalued.
So another thing that we wanted to discuss was the advent, or the a movement called the FIRE movement that has become so popular with especially the young professionals now. There's a group of very sort of famous finfluencers who have popularized this notion that you should retire early, and you can in the next 8 to 10 years, provided you live a certain way. So the FIRE movement, just for me to explain, is where people devote their lives to a program where they live with extreme frugality, and invest most of what they're earning, right? Usually it's about 60 to 70% of what they're earning, in the hope to retire early. So people in their 20s, hope to retire by their early 30s. People in their 30s hope to retire by their early 40s, and just live off of that portfolio, right? So this concept has become extremely popular, and we had a few thoughts on it, just to see sort of why it's become so popular. What is the need that people feel to retire early? Is it even possible in the first place? What are the numbers looking like? So guys, if you want to just start giving some of your thoughts on the FIRE movement, and what do you think of it?
So I'd like to point out that FIRE is quite an extreme way to live.
Yeah.
To retire early, if you want to retire in 10, 15 years of your
Sorry, I
career.
forgot to mention the full form. It's
Yeah.
financial independence, retire early, right?
Yeah, exactly. And it's quite different, I would say, to financial freedom. Retiring early, retiring just after working 10, 15 years and then sustaining that amount of money over the next 30, 40, 50 years requires you to be extremely frugal now, give up on a lot of things, make a lot of sacrifices, and in the hope of building up a corpus which will last you a lifetime. Now, if people want to do that, it's fine. But what I have often seen is that people tend to underestimate the corpus that they'll need for a few reasons. Number one, inflation is higher than you would think. Number two, life expectancy. Your lifespans are much longer than you think. To give you a number, life expectancy in the last 20 years has gone up from 63 to 70 for the average person in India. For the wealthy or the above average people, it would be a higher number and it would increase faster. So if that can happen in 20 years, you're probably going to actually live much longer than you would think. And that's how much more you need to save for. So a lot of the rule of thumbs that you see today, they may not really make sense. And, the proper calculations need to be done on what.
The rule of thumb, I think, for the corpus that you need is 25 times your annual expenses. At least right now, that's the rule of thumb. But maybe 4 years back, just before COVID, this rule of thumb might have been different. It might have been 15 or 20. Right? In the last 3 years, we've seen money lose a lot of value with the way inflation has come up. And now one crore means absolutely nothing. So perhaps when another pandemic hits or some other black swan event happens, whereby so much money is pumped into the market by central banks, after 10 years, maybe you'll need 50 times your annual expenses. And if that's the time that you've already retired, and let's say you've been retired for 5 years, 6 years, and you don't have the skill to make it back into the employment force anymore, what do you do then? You're setting yourself up for a big problem. One more thing that I personally feel on a softer side, I think that what, like you said, FIRE is a very extreme way to live, right? And the way I look at it is like it's like building a body but on steroids, right? You can get to your financial freedom in in a 15-20 year period, or you can get there in 5 years, right? But that 5 years will require a lot of sacrifice. And I feel that people who are in their 20s and 30s, they should be able to live their life a little bit. And what the FIRE proponents say that is you've got to basically sacrifice everything. You can't buy that car you want, you can't buy that watch you want, you can't go on those trips, only so that one day you can.
You can't travel. I mean, extreme proponents of it, they don't travel, they don't go out with friends, they always just eat in, things like that.
Yeah, for one day in your when you're turned, let's say 40, you would be able to suddenly do all of these things again. look, life is not the same once you're in your 40s, right, versus what you are in your 20s or what you are in your 30s. Every decade or every year warrants or deserves, you deserve different experiences. So living like that, in my opinion, it just kind of defeats the purpose of life. You need to be able to enjoy it, enjoy your work. And living like this basically means something is very, very wrong in your life right now. That's how I would put it.
Yeah, you're basically giving up on personal growth, and life is not just about money, but also about growing as a person, which I think you're missing out on.
No, but with all due respect, I absolutely do not believe in this concept at all. It is just started in the last 4. Have you heard about FIRE in the before the last
No,
4
it's a
years or
very
5 years?
recent
It's a
thing.
finfluencer
It's
It's a
come
social
concept.
after
media
COVID.
thing.
It's
Yeah.
because of these influencers. They want to attract more and more audiences towards investing in equity or the products that they are selling, or maybe real estate, or just to follow them on Instagram or YouTube, right? And it's just something that is kind of harming them more than, say, retire early or financial independence of that sort, because nobody absolutely knows what kind of medical expenses you're going to get after 30 years. There are people retiring at 30 saying that I have 5 to 10 crores right now and that's going to last me because मुझे 60% FD देगा, 10% equity देगा. That's rubbish. Yeah, there are periods where equity will not give you any return. What are you going to do? Are you going to live off your portfolio? There are periods where your expenses that you've account for, which could be, let's say, whatever you said, into 25 or into 20 or whatever that is, right? There are going to be medical expenses, there are going to be other family expenses or whatever it is. And as you mentioned, living your life, yeah, you're 30, you're 35, let's say you retire, you're completely free, and you've not done anything till date, and suddenly you wake up and you're like, okay, cool, I'm going to be a traveler, I'm going to go out, I'm
Yeah,
going to
you
do
can't just
this.
change
It's
your
rubbish.
personality like that all of a sudden.
It's
You won't
absolutely
have a
rubbish.
personality.
Exactly.
I was just in Bangalore a few weeks back, and a client of mine said that I want to buy an X5. I was like, dude, go for it. You deserve it. Why not? Yeah. I mean, what is the guy working for at the end of the day? And see, if you are so hell bent on fire, that means somewhere you don't like your job, you don't enjoy it, right? If the concept of retirement early and just leaving everything and living off of your portfolio occurs to you, then maybe you have to ask yourself a deeper philosophical question, that why am I not enjoying what I'm doing every single day? Instead of that, work on improving your skill, yeah, work on improving your ability, and get into a profession where you actually enjoy, where you don't have to think about कि हाँ 10 साल तक सफर कर लेता हूँ, उसके बाद I will be completely free. No, work, you got to work, where's your purpose going to come from? So you got to work for the next 15 years, 20 years, 25 years. The nature of that work may change, but find what every day should be joyful, right?
No,
Every day
and
should be fun.
we've seen people, yeah, even when this term was not there, there are people who are retiring at 40, 45, 50, not
Yeah.
because they live frugally or they just want to be like, okay, I want to get done with my work. It's because they've improved their skill set so much that they
Correct.
were paid much more than what they deserve,
Yeah.
and that helped them,
Yeah.
right?
And they enjoy it. They
it's-
enjoy what,
so
doing
the
what they do.
idea and the mindset of any young investor or someone who's working or a professional, right, should be to improve their skill set, make as much money as you can, and then when they feel comfortable, or let's say they're just too tired of working, then maybe retire. It's not like I will not do anything for the next 10 years. I'll save as much as possible. With all due respect to those who are doing that also, fair enough, you can do that, but it's not sustainable, right? A one black swan event or one some major expense, right? And you're done. All your mathematical models have gone to dogs, right? So there are two aspects to it. Whenever you want to think about doing this, also there are people, I'm sure, every day thinking about retirement early, this, that. Make a mathematical model and make a practical model as well. Of course, it's very difficult to incorporate everything within that, but a practical model genuinely tells you अपने आप पे काम करो, आगे बढ़ो, and just try to maximize how much ever you can within your job. Increasing income is the best way to kind of retire early rather than reducing your expenses.
And I just also had a thought, what kind of society would we have or be living in if everybody just thought of fire?
घर पे बैठे
Yeah, if
हैं.
everyone's retired at
If
35,
everyone's
40.
just freaking retired at 35, 40, you're not improving or you're not doing anything to contribute to society in a meaningful way. You're not providing any employment, you're not helping anyone. All you're thinking is, this is the corpus I need, right, to live off my life. I can withdraw 6% of it every year and I'll live for the rest of your life. And sure, everybody is entitled to live the way they want to. But I'm just thinking, so it would be a pretty shitty society where everybody is just thinking about what corpus they need, and what that's a pretty selfish approach in my opinion. I think we need people who think beyond this, right? And that's what creates the world we live in.
And this is what I'm telling you. No, you guys are not on Instagram, right? I'll tell
Yeah.
you. You come across these reels, a simple reel where a guy is overestimating HWP so much कि आप इतना डालो
HWP, why is it blown up on social media all of a sudden?
6% HWP करोगे तो भी आपका 10-20 साल बाद ये 5 करोड़ का 20 करोड़ होगा. And I was like, what the hell is that?
Their maths is outright wrong.
Exactly.
Someone sent me this. A client sent me this that SWP is more powerful than SIP.
SIP. Yeah,
What the
absolutely.
hell? That makes
That
no
is what is
sense.
going
How can
on.
you have an SWP without having a corpus?
So there are
You
guys.
पहले SIP करो तो SWP कर
This
पाओगे
is
ना?
this is what happened last week. There's a guy who's doing an X amount of SIP, and he's like, "यही SIP में से SWP करता है." And I was like, "Oh my God, what is going to happen to the generation? Because who kind of gets their finance from reels and social media? It's crazy, and this is just trust me, this is just to sell views, just to sell their product or whatever that is, and absolutely no basis to it. So anyone who's listening to this or all our viewers, right? It's very important to not believe in fire.
I mean, not.
I don't
it's-
believe in it at all. I'm sorry.
See, I've had
It's
conversations
rubbish. Well, you have
where
an extreme view, yeah.
It is rubbish.
I
man.
never knew until we started shooting this that you hate fire so much.
It's not practical at all.
guys
yaar.
just to point out, FIRE, Viraj does not hate financial planning and financial freedom.
Of course not. Yeah.
You got to plan
That
for
is
that
different.
and have that in
is
a realistic way.
FPFF. Yeah. Do
FPFF.
FPFF. That's
You
what-
start a new trend. Hashtag FPFF.
You go viral on social media. I've had a lot of conversations where people are just obsessed with having a passive source of income. That I need 2, 3, 3, 4 sources of income because that's what they've seen, people do on social media or some businessmen do. But your core strength, your core career, that is always going to be your main wealth builder. Why not just focus on that? And compounding works in everything. You try to improve your skill set, you try and do better in your career, in your business, in your job. That's going to always create more wealth for you than obsessing over other things which give you a little bit of income here and there and feeling good that I have 2 sources of income.
I'm tired of pretending, of people pretending that investing is what creates wealth. Investing does
Absolutely.
not create wealth. Your career creates wealth. If you are a wealth manager, how you perform at your business creates wealth. If you are running a chemical factory or a diamond factory, how you do it, that creates wealth. If you're a good lawyer, how you practice law, that creates wealth. Focus on your career and profession. That is what's going to create wealth, not, your monthly SIPs. Of course, they're very helpful. And while we, that's what we do for a living, but that is not what creates wealth,
Yeah.
right?
You earn
That's-
5 lakhs, you can't do a 4,80,000 SIP and live off 20,000 a month and
Yeah.
be like, okay, I'm retiring in 5 years.
Yeah,
That's rubbish.
work towards for ये 5 लाख का 10 लाख करो यार, work towards that and बाकी का हमको दे दो. हम लोग ऐसा
No,
ही
but
करें.
there are what has happened though of late. There are these sets of rules that are being made.
These thumb rules
thumb
are
rules.
damn
Thumb rules.
annoying, man.
Renting versus buying का एक thumb rule बन चुका है.
हाँ.
ये अपना
Fire का
fire का thumb rule बन गया and it's rubbish. These 2 guys who are responsible for it.
Who say name them?
वो
ना?
photo डाल देंगे.
And also, people are obsessed with retiring, not realizing that they're like, बस, goal तक पहुंचना है. Once you reach the goal, they don't know what to do. It's like a dog chasing a car, but if it actually catches the car, it's clueless what to do. Retirement's actually quite boring.
No, someone just got 10 crores and they are like, okay, you know what, I'm retiring. He went to the hills. Retired with 10 crores. It took 2 years for him to come back. He's like, it was absolutely boring.
There are many
Yeah.
examples that
Absolutely
people who
boring.
found
What the hell will you do in
retirement
hills?
very boring.
ठीक है, anyway, so that's on the FIRE movement. I think you guys should do a little bit more research as to, while financial freedom and financial planning is obviously a very important thing, but chasing this FIRE movement, which is a pretty extreme way to live, don't let anyone else tell you how to live your life and how many sacrifices you should make. If you feel like you worked hard enough and you deserve to get something, then you should. It's important to reward yourself every once in a while. Do your math, get a financial planner, do your research carefully, and I'm sure it's not that hard to figure out, right? So thanks so much for watching. We hope you enjoyed the episode. See you next time.